What about inflation? Because I think that the fourth element is obviously that gold tends to be an inflation hedge. People fear that central bank policies can drive inflation too high, and therefore there was a big trade buying gold ahead of that risk of high inflation. Didn't happen, and actually inflation expectations are coming down. So probably that explains quite a bit about what's happening to gold, in the sense that what people fear is actually not an inflationary outcome of QE and tightening, but a deflationary one. And how do you see that actually?
Yeah, I thought it was quite interesting on Wednesday when the Fed was more hawkish than I think most people expected. Gold actually rose. Yeah. Now, we're talking like $6 or something, yeah, so perhaps we shouldn't read too much into it. But for gold, that's a big move, yeah? And I think probably the sort of the consensus, or dare I say the counter-consensus trade, has moved from the Fed's behind the curve to the Fed might be ahead of the curve. Inflation perhaps to the fear of slowdown and recession. Sure. Actually, if you look at the gold price over the last 20 years, it's been recession that's been good for gold, not inflation.
Absolutely. So do you think that actually what could change the tide then is the evidence of recession instead of a global slow? I think that the market is moving to a global slowdown on an already very optimistic expectations of growth, so nothing bad about it, but a change into a recessionary mentality.
Yeah, I think so. I always say, and I've said it on this program before, gold does well when central bankers are losing control. At the moment, they look in control to me, so I think short term we could go a bit lower.
Yeah.
Next year might look a bit different.
What about